Hello, my name is Cheryl Levine and I'm a member of BDO's IFRS advisory team. In this article, we look at whether under the new leases standard, IFRS 16, an employer would be required to capitalize a right-of-use asset and a lease liability on their balance sheet when they are a party to a novated lease arrangement. A novated lease arrangement usually occurs where an employee, for their personal use, enters into a lease agreement with a finance company and then enters into a three-party agreement with the finance company and their employer, whereby the employer essentially takes over the lease obligations of the lessee or the employee. If the employee ceases employment, the novation agreement ends and all lease obligations will revert back to the employee. And it's important to note in these arrangements that the employee is usually the one that bears the risk of the residual or balloon payment. In answering the question, the article looks at the definition of a lease in IFRS 16, and particularly whether the employer has the right to obtain substantially all of the economic benefits from using the asset, and also whether the employer has the ability to direct the use of the identified asset. Please read our article to find out the answer to this question, and if you have any implementation issues on IFRS 16, please contact your local engagement partner or a member of our IFRS advisory team.